Hello there. In this video, let's try to understand about SIP in mutual fund investments. These days, you might be hearing the word SIP more and more being promoted by both mutual fund companies and in many investment discussions. So, what exactly is SIP? SIP stands for Systematic Investment Plan. Okay, I would like to emphasize the word systematic. It is not a mutual fund scheme or another investment product. I have come across this question in many discussions from someone new to the investment, if whether they should invest in a SIP or fixed deposit or ELSS. Okay, to answer that question, SIP is not a investment scheme or product where you invest into. SIP is a way of investing your money regularly or systematically into a mutual fund scheme. So it is a way or an approach of investing your money. What SIPs brings out or it differs from other approaches is it enables a planned and disciplined approach to investment. Here the word planned and disciplined has to be emphasized. Okay, the planned because you need to have a proper planning, and disciplined because SIP works only if you are disciplined with your investments. Okay, so let's try to understand how exactly SIP works. Now you have chosen a mutual fund scheme in which you want to invest in your money into, and you would like to go with the SIP approach. So in this scenario, first thing is you determine, because it has to be planned, right? So you determine how much fixed amount you want to invest. For example, let's say 5,000 rupees you want to invest. And second is when you want to invest. Okay, so whether you want to invest on the first working day of every month, or once every quarter, or maybe 25th working day of every month. So you need to determine when you want to invest that 5,000 rupees into that chosen mutual fund scheme. Now third is by what means to invest. Okay, so you can do that basing on post-dated checks or using auto debit from your bank account. Okay, now fourth is till what date you want this 5,000 rupees investment on every first working day of month by auto debit mode to continue. Maybe you can set a future target date, maybe Jan 2019, basing on a goal that you're planning or you have. And then once you have determined all these parameters, you fill an application form, which is common to any other mutual fund scheme investment. Along with that, you also fill in SIP mandate form with this predetermined amounts and dates that you planned, and then submit these forms either mutual fund company website or maybe at their branch or through a broker or advisor. It's that simple. So once you submit these documents, and when the next month, on the first working day of next month, if you have chosen auto debit mode, that 5,000 rupees is auto debited from your account directly. Okay, it's auto debited and then invested into that scheme. Okay, this would continue happening till January 2019. So this way, every month, on the first of every month, 5,000 rupees will be systematically invested into that chosen mutual fund scheme, helping you go with a disciplined investment approach. Okay, I hope this gave you a picture of how the SIP works. Now, coming to the benefits of SIP, considering that you can start with as little money as possible in a SIP. You just have to, let's say you start with 1,000 rupees, you just have to invest that 1,000 rupees month on month or quarter on quarter. So you can start with just as little as 1,000 rupees, and you just keep on investing regularly, which is considered as the um, principle of wealth creation. So you can start just when you are still in college with just 1,000 rupees that you received as a pocket money, and continue till your retirement. That's going to be a huge amount. This enables a disciplined approach to investment, right? It auto debits from your bank account, so that before you spend that amount on the second of the month, the amount gets deducted on the first of the month itself, so that whatever left can be spent by you on your needs. And yes, like I mentioned, you can invest even a very small amount. You don't have to wait for that 50,000 rupees or 1 lakh rupees. You can just start with 1,000 rupees. This is very important point. You can't time the market. You and I are not stock market gurus, and we pretty much know that we can't catch the bottoms where we would really like to invest in. By instead going with this disciplined approach, we would be in a better position instead of trying to time the market. And then the cost averaging. So this is called as dollar cost averaging or rupee cost averaging. So what happens is, let's say you have purchased 10 units of a mutual fund scheme in this first working day of this month. Okay, and then market went down in the next month. So when your installment of investment goes, instead of 10 units, now you might get 12 units. Okay. On the other hand, if the market has gained from your previous month's installment, now you might get 9 units instead of 10 units. Okay. So what happens in a falling market? You receive more units of the mutual fund for the same amount. In the long-term period, it averages. You must continue this SIP investment in a falling market. Okay, then only you will benefit from SIP. If you invest in a gaining market, you would receive less number of units. On the other hand, if you continue your investment in a falling market, you would start receiving more units for the same fixed amount, thereby averaging the number of units that you hold over a period of time. Okay, so when the market turns around and start gaining, now you have more units, and then each of that unit would be gaining, which means you would have a much more higher gains than if you stop when the markets are falling. Okay, and let's be clear. Okay, because we are going with a systematic investment approach, that doesn't eliminate the market linked risks. All your investments are subjected to market risks, and SIP helps to reduce the risk by averaging the cost. Okay, and some advise against SIP approach, and instead they suggest to base your investment decision on parameters like moving averages or PE. But if you are new to investments and you're not really understanding what these are, just forget and you may straight away go with SIP approach. So it has its own benefits, and if you are a new to investment world and want to start with small investment or small amount and take a disciplined approach, SIP would be the best way to go. Okay, I hope this video helps you understand what SIP means and make a better decision in your investment world. Thank you for watching, and please remember to like and subscribe for more videos. Thank you.